Hello and welcome to another of the topical tax tips from me, Bernard Kitley, tax manager at Aspen Waite. It's the season at the moment where we're putting together our P11Ds for our clients, and so I thought it would be a good time to remind us all about benefits in kind. This is only going to be a quick run through of the tax treatment of some of the common benefits. For further details, or if you want to discuss any specifics, then please contact us for a personal meeting. Obviously, the first one we will always look at is the company cars. It's a common form of benefit. It's still quite popular. I have spoken about this in a previous episode, and I'd just like to highlight the tax advantages this time of switching to electric vehicles when the time comes for a change in the employee's car. The benefit in kind for a petrol diesel car is calculated by multiplying a percentage calculated on the car's emissions by the list price when it's new, and this can be quite prohibitive, especially as the percentage could be as much as 37%. But the good news is, if you have an EV, clearly it has no emissions, and the benefit in kind is only 2% of the list price. And also, another good thing is that the electricity is not treated as fuel, so there's no additional benefit, which would not be the case if there was a petrol or diesel vehicle being used. So it's something that we are looking for our clients when they're changing their vehicle structuring to actually look at electric vehicles. There's a lot more in the electric vehicle world, which I won't go into now, including charging points and things like that. Again, if you want any further details, then we're more than happy to take that further for you. A number of our clients are also using vans. We'll be familiar with the standard benefit. It doesn't matter what size a van is. It's a standard benefit of £3,960. So a basic rate employee, that represents £792 worth of tax. If the employer also pays for the fuel, which is often the case, then there's a further benefit of £757. That £757 represents £151.40 additional tax to the employee. However, if instead of a petrol or diesel vehicle we were to use an electric vehicle, an electric van, then there's no benefit in kind on the electric van that's provided to the employee, nor will there be any fuel benefit. So even though it's not a great charge to tax for the employee with a conventional van, moving over to electric would also save the employee some additional tax. Turning now to another popular benefit is the provision of vouchers. Vouchers are becoming increasingly used to pay bonuses and incentive payments. There's a potential tax charge to the employee, so £1,000 of high street vouchers would be have a tax bill to the employee of £200, basic rate, but the usual arrangement would be for the employer to pay that additional tax under a PAYE settlement arrangement with HMRC. So that would mean that the employee would be getting a benefit in kind, but actually would not have a tax charge because the additional tax is paid by the employer. The other type of voucher that was commonly used was for the provision of childcare. A basic rate taxpayer could have up to £55 a week in vouchers without any taxable benefit, but unfortunately that scheme was stopped for new employees in 2018. There are still schemes out there, one involving a salary sacrifice of £55, being replaced with £55 worth of vouchers each week, which would give an increase in net income of up to £816 a year. Those things are, as I said, have stopped since 2018, but if they are in existence at that time, not available for new employees, existing employees can still get the benefit. If that applies to you and you're not quite sure how it works, then again, give us a shout. We can give you some additional help. The interaction of the benefits scheme system that can be claimed with children is very complex. The whole area of childcare provision has become much more complicated, and we would be happy to advise on an individual basis because no two schemes are the same anymore. One of the popular ways that we all get around these days is we're never too far away from a mobile phone, and so the employer can provide one mobile phone and pay all the bills, including the line rental and the private calls, and there would be no tax charge to the employee. So sometimes it's just a little tweak to the employment structure of how it all goes. One of the things I'm seeing more and more is that the employer provides an asset, obviously not a car or a van, but another type of asset as a benefit for the employee. This is calculated at a very easy rate of 20% of the market value when it's first provided to the employee. This could be a good way of rewarding employees. So you could provide electronic equipment like TVs and sound systems, specialist sporting equipment like road bikes and things like that. As an example, a Boardman SLR road bike, which Holfords are currently selling for £3,950. If that was bought by the employer and provided to the employee, then that would give an annual tax bill to the employee of either £316 or £632, depending on whether they were a basic rate or a higher rate taxpayer. So it's quite a saving for quite a substantial piece of kit. When we look at something else that is often paid by the employer is subscriptions. The payment of a professional subscription is not a taxable benefit. An employer could pay the subscription to a golf club, the tennis club, cricket club, or to the opera society. This would be clearly taxable on the employee, but the net saving would be around £68 per £1,000 of expenditure when looking at the tax treatment of the employer and employee together. One final thing to look at is the provision of goods and services. And the taxable benefit in this case is very easy to work out because it's the extra cost to the employer of providing the benefit. So for example, if you work for a footwear manufacturer and you get free shoes, then the benefit is the cost of the materials and the manufacturing costs of the shoes. If you work in a private school and you get free placement of your child at the school, then again the cost of the benefit in kind is the additional cost, the marginal cost of providing one extra placement at the school, and there's tax cases on that. If however you work for a train company and you get free travel on their trains, there is no additional cost to the employer in providing the benefit, because the train is going to run anyway, and so it's tax-free. So that's just a little gallop through the ways that an employer can give a little bit of incentive to the employee without actually putting their salary up. They can actually give a few little things. I haven't mentioned things like the bicycle to work scheme, because that's something that's outside the arrangements that we're looking at here. But we do a number of things for our employee relations here at Aspen Waite in conjunction with our sister company, Aspen Waite People, and to help the employer and the employee get the most out of the tax system. So if you've got any queries, please do not hesitate to contact me, and I'll be able to give you some further guidance as to how the system works and how you can benefit from the benefits. So thank you very much for taking your time today, and I hope to catch up with you again soon. Goodbye.